Welcome, everybody. My name is Stephen Mee with Domicile Real Estate, where it is too short of a life to live in a boring house. We are real estate for people who love houses. Anyhow, this is our Southern California housing market update for September 7th, 2021. We are just past Labor Day weekend. I hope everybody had a great Labor Day weekend. It was definitely warm on Saturday and especially Sunday. And that's kind of a bit of a metaphor for the housing market as well. It's kind of interesting. I put here taking note of the fall market, and it's kind of interesting what's going on. But what's even more interesting is kind of what's not going on. So I want to jump right into these statistics and really kind of start talking about what we're seeing and why some of this is kind of puzzling information a little bit. So we're going to jump in here. Go back to the beginning of our slide deck. So first and foremost, inventory dropped again in both of our price categories, both our under 1 million and our 1 to 2 million. Now, these inventory changes are not as severe as they are in the entry-level market, which is kind of interesting, right? So if you look here, we're down to around 6,000 active units under $1 million. That's about where we've kind of been at around that level since about the middle of July. We got a little bit of a bump there in August, and now it has come back down again. Kind of a similar story here for our 1 to 2 million. Inventory rose up, crested, and then it has been falling a little bit. And one of the things that I keep talking about, and of course, just as a reminder to everybody, these statistics are based on Los Angeles and Orange counties. So, one of the things that we keep talking about is sort of waiting for that other inventory to drop on inventory. And when we saw those inventory increases starting to happen late this summer, it looked like we were paving the way to more normal inventory. But when I start to look at this pattern that we see here, what I start thinking about is that, I think our inventory high point may have come and gone for this year. And now we've got families with kids in school. School has started back on. That actually usually puts a damper on people moving. And now I'm starting to see there being a decent amount of things that are keeping houses off the market. And I wonder, was this our high watermark for inventory for the year? Just around 6,300 active units under $1 million. Was that as good as it was going to get? And now we're going to trail off towards the end of the year, which is typically what happens. So now if we're looking at the supply side of things, it's not easy, or it's not hard to spot the reason why inventory is dropping. This is the new homes hitting the market in the last 14 days. This is a number in our under 1 million that we have not seen since all the way back here towards the end of January. Part of this is, of course, we had a holiday weekend, kids going back to school. These things definitely represent a low point. But, I'm beginning to think we've kind of seen the best numbers we were going to see. And I think there's a lot of consternation among economists. I've talked about this a couple of times before. I think there's some economists that are asking the question, with prices so high, why are sellers reluctant to put their house on the market? Supply and demand dictates with those prices, they should be burning to put those houses on the market. But I think the situation is more complicated. I think sellers are asking the question, great, my house is worth a lot, but where am I going to go and how hard is it going to be to buy that house? So I feel like we've kind of had our summer peak. It has come and gone. I do think this number might bounce back a little bit, but I mean, gosh, we're looking at end of January type lows for the number of new houses that came on the market. And it's kind of a similar story here in our 1 to 2 million category. Maybe we don't have to go quite as far back, more to the middle or end of February, but the same kind of thing. These bigger numbers we saw have retreated, and really in this under 1 million category, I mean, that's almost 1,000 house a week difference between our peak, which was right around that second and third week in July. Now, if this is the supply side of the equation, right? What is the demand side? Is the demand dropping? Well, yes, but in only a small amount, right? I mean, and what does this tell me when I see a supply side that looks way more reactive than a demand side? Well, what does this mean? It means that I don't think we are in a situation with a bunch of irrational buyers who are out there saying, I don't care, I will pay whatever for a house. I do think buyers are maybe getting a little bit pickier, and you see this kind of gentle downward slope in demand, right? It's not dramatic. This is a small reduction in that demand. And I think that this is a sign that buyers are making rational choices in the marketplace. Interest rates went up a little bit. I think prices are a bit higher than they were in the spring. And I think buyers are, that's weeded some people out, but it hasn't weeded everybody out. In fact, it maybe has only weeded, 10% of those buyers out from that peak point that we had. Demand is even steadier here in 1 to 2 million. I mean, what this tells me is this is a market that honestly really doesn't change a whole lot. And that's not surprising, right? That the finances of that luxury segment would maybe be a little bit steadier and we wouldn't see as big of changes. Now, if we look at our absorption rate, what does it mean when fewer houses are coming on the market and demand is staying approximately the same? Well, that absorption rate is going to go up. And here we are, 1 to 2 million is at a never before seen 90% absorption rate. That means for every 10 houses that come on the market, 9 houses go into escrow. You might think that means there's an extra 10% of houses, but you have to remember, some houses never sell, they get pulled. Some sellers are not terribly realistic about their prices. So, really, anytime you're over this 90% figure, and if you look, our under 1 million category is also over 90%. Really, this is crazy territory. This is very, very competitive market at this exact moment in time. So definitely be aware of that. Now, moving into our prices, these price graphs, I think I almost call them the graphs of remorse, because these graphs tell you where the market was 4 to 6 weeks ago. And yeah, we definitely saw a little bit of softness, especially in our 75th percentile pricing, our median pricing, and flatness in our entry-level pricing. I don't think that's where the market is now. I think it has resumed a, albeit very steady, low level of increase. But I think if we have enough weeks where there simply aren't enough houses, we're going to get back into bidding warville, where people, especially for those desirable houses, are willing to go to the mat on price, saying, I'd rather pay $10,000 too much for a house I love than get a good deal on a house I don't. We're looking at this still active after 14 days, where we look at all the homes that came on the market in the last 14 days, how many are still left. Remember, lower is more competitive. We saw this gradual rise as we went through the summer, indicating, a market that was gradually losing a little steam. Then it's kind of stabilized. And I kind of feel like this might be the zone that we see for the rest of the year here. List to close or closed to list ratio. This is a favorite chart of mine because this says a lot about the expectations of buyers and sellers. You'll see our 1 to 2 million, it is shot back up here, heading towards 104%. I do think that this momentary increase in competition will result in these numbers going back up, but I still see the general trend is going to be heading back down towards that 101%. I don't know if we'll get there by the end of the year, but I think that's where we're going to end up as a market as a whole. Now, this one is our days on market, and I want to pause for a second. A lot of people have an argument about days on market, and the argument goes like this. Some people think days on market is what's called a leading indicator, meaning if your market is starting to slow, you're going to see it first in days on market. And other people think that days on market is a trailing indicator, meaning days on market only shows up as a problem after your market has already started to cool off. I am actually not just being a people pleaser. I think it is a real-time statistic. I think it tells you exactly what the market is doing at this moment in time. If we take a look here, we see something kind of interesting. And that is, if you look here, our 1 to 2 million category has seen days on market rise up slowly, albeit in the world of the grand scheme of things, we are still lower than we were as of March 23rd. But if you look here down at under 1 million, look how steady this is. We saw this rising up a little bit. Maybe it still is, but we're hovering right around that 20-day mark. I can see this taking another momentary dip. In fact, you see from week to week, it actually did drop a little bit. What sometimes this statistic indicates is it can also indicate buyer pickiness. right? Let's talk about two market extremes, both of which may produce a high absorption rate. In one extreme, you have buyers willing to buy whatever comes on the market, right? So for every 10 houses that come on the market, 9 of those get snapped up. 9 of those new homes get snapped up. Or you can have a market where buyers get picky. And in a picky market, you might still have, for every 10 homes that come on the market, 9 go into escrow, but it's not necessarily those 9 that just went onto the market. It might be 5 that just came onto the market, the 5 best ones, and then 5 from the past where the prices have now dropped or something's now happened with them. And I actually think we are looking more like the latter at the moment, given our inventory levels that are still a bit higher than they were earlier in the spring. And I think in that luxury market, especially, that's what we are seeing, is that I actually think this indicates that some buyers are actually going after some of those homes that maybe were sitting for a little while, not necessarily the brand new listings. Because of that, it's going to result in a higher average days on market that we see. So I don't necessarily think this is an indication of a softening market per se, but a market where buyers are getting pickier. I've been saying that for a while. I still believe that anytime, you have more inventory, you are going to force buyers to be pickier because they have the choice. Let's talk about affordability. And again, this is based on median price data that's closed, which means it's 4 to 6 weeks old. But I mean, look, we're really, our market accelerated up to this 110, 115% zone of where prices were in June of 2018. And I'm talking about payments here. It's the payment on a median priced home. And really, I think this is a very appropriate place to be. We're seeing decent wage growth versus June of 2018. I mean, that is almost 3.5 years ago. Is it that unreasonable to say that prices have gone 15% over that 3.5 year period? I don't think that that is an unreasonable situation. So, when I look at this, this indicates to me that we are still in that sort of healthy market zone, in that rational buyer market zone, not in the irrational crazy town buyer. I will pay ridiculous prices because I think I'm speculating, right? Speculation is something that I like to always bring up and mention, because I think that is the word that describes the 2007 real estate market, and that is not what I see going on here. And then just for fun, mortgage rates, they have really just been sitting flat pretty much for the last month here in that kind of high 2s, that 2.875% range. Steady mortgage rates really are a good thing for the real estate industry. It's really good actually for buyers and for sellers. So what does this mean, right? If you are a buyer or seller in a market like this? Well, the first thing it means is, the good news is, yes, inventory is eroding if you are a buyer, but it is still better than it was in the spring. You still have more choice. My advice is always still, if you're able to buy a home, and if there are homes that meet your family's needs, whatever those might be, I still think now is a good time. I also think you can afford to be a little pickier because there are more houses to choose from. If you're a seller, well, there's some good news. You're getting a little bit of a second win. I think that you might find, especially if you are priced right for what product you have, that you're going to see multiple bids. I think this is a very pricing sensitive market. I am seeing some down arrows in the MLS. What does that mean? It means that we have some situations where maybe sellers were a little too aggressive on that pricing. They were reaching a little too high, and they figured out they were in the wrong zone. And as soon as they switched their pricing down, they immediately got an offer. So bear in mind that you can't just ask for whatever you want. But I do think if you've got a well-prepped house, now is a really good time to sell it. Prices are high and buyers are out there, especially if you need things like a log rent back or other terms. This is the kind of market where you're likely to get those terms, especially if you have a house that is desirable and a compelling proposition. Thank you guys for watching. Questions, comments, we love them. Do not forget to like, subscribe, hit that notification bell, especially on the likes. That really helps us a lot for this video getting shown to other people and more people subscribing, and us being able to help more people and do even more videos and cool stuff. We've got some cool stuff coming out this week that I can't wait to share with you, but I do not want to spoil the surprise. So if you are not subscribed, absolutely, if you're watching this on YouTube, subscribe so that way you will see that. We do not always put all of our videos on Facebook. We only put some of them on Facebook. So if you are interested in that stuff, absolutely like and subscribe and hit that notification bell. Anyhow, Stephen Mean with Domicile Real Estate for people who love houses. We will see you later on this week for our window shopping series and also our first-time home buyer market update. We'll see you soon.